In this video, I'll reveal a pro trader's blueprint for your first 90 days of trading. There's a famous rule you've probably heard on Reddit, the 90-90-90 rule. It says that 90% of traders lose 90% of their money in the first 90 days. Research actually backs this up. Some studies show that 80% of all day traders quit within the first 2 years. But what if I told you there's a step-by-step plan designed to put you in the 10% that survive and eventually thrive? This isn't about finding a secret indicator or a holy grail strategy. This is a structured, actionable plan that tells you exactly what to do and, more importantly, what to ignore for your first 30, 60, and 90 days. So let's dive in. The number one reason beginners fail is information overload. You're told you need to learn candlesticks, chart patterns, indicators, risk management, psychology, all at once. It's a recipe for disaster. This blueprint does the opposite. It's built on one core principle: simplicity and focus. For the next 90 days, your job is to master one pattern, one risk rule, and one process. That's it. We're going to break this down into 3 phases. Month 1 is about mastering your foundation. Month 2 is about mastering your discipline. And month 3 is about mastering your data. Let's start with month 1. The only goal for your first 30 days is survival and learning. You are not trying to make money. I'll repeat that. You are not trying to make money. If you focus on profits now, you are guaranteed to become part of that 90% statistic. So here is your exact 4-step plan for month 1. Step 1, you will only use a paper trading account. Paper trading lets you practice the mechanics of placing trades without risking real money. Research shows it's an essential learning tool for new traders. Now, it's not perfect, it can't replicate the psychological stress of having real money on the line, but we'll get to that in month 2. For now, your job is to get comfortable with your platform. For the best paper trading, I recommend using EightCap. Use my link below, it gives you access to the best spreads and liquidity when you go live, or scan the QR code on screen. Step 2. You will master one trading pattern and only one. The pattern we'll focus on is the break of structure, or BOS. I've made entire videos on this concept because it's the foundation of understanding trend. In simple terms, a break of structure occurs when price moves beyond a previous swing high in an uptrend, or a swing low in a downtrend. It's a signal that the current trend is likely to continue. Your only job in month 1 is to open your charts and identify this one pattern. Don't worry about anything else. Just find the break of structure over and over again. Step 3, you will master one risk rule, the 1% rule. This is non-negotiable. Professional traders live by this. Statistics show they typically risk no more than 1% at a time, while most retail traders risk far too much. Let me show you why this is so important. Let's say you have a $10,000 account. If you risk 1% per trade and lose 10 trades in a row, you've lost about $1,000. Your account is at $9,000. It's a drawdown, but you're still in the game. Now, if you risk 10% per trade and lose 10 trades in a row, your account is down over 60%. It's nearly impossible to recover from that. In month 1, every single paper trade you take will use the 1% rule. Step 4, you will start a trading journal. This is the habit that ties everything together. Your journal doesn't need to be complicated. For every trade, you will log the date and time, the setup, which will always be break of structure, your entry and exit price, and a screenshot of the chart before and after. This feels tedious at first, but I promise you, this is the single most important habit of a profitable trader. So to recap, month 1, paper trade only, identify one pattern, the break of structure, apply one rule, the 1% risk rule, and journal every trade. Do this for 30 days and you will build a solid foundation that 99% of beginners never do. Okay, let's move on to month 2. If month 1 was about learning the rules, month 2 is about learning to follow them under pressure. The goal for this month is perfect execution, not profit. Here's your plan for month 2. Step 1, move to a small live account. This is where you introduce real emotion. And when I say small, I mean it. An amount you are genuinely okay with losing. $100, $200, whatever that number is for you. The purpose of this money is not to make you rich. It's tuition. It's the price you pay to learn how to manage fear and greed. Step 2, the 10 trade challenge. This is your only goal for the next 30 days. Your mission is to take 10 consecutive trades where you follow your rules perfectly. That means you only traded the break of structure pattern, you only risked 1% of your account, and you journaled the trade. The outcome of the trade, whether it was a win or a loss, is completely irrelevant. If you take a trade that follows all your rules and it's a loss, that is a successful day. You get a check mark. If you take a trade that breaks your rules and you make money, that is a failure. You have to start the 10 trade count over. This builds the habit of discipline, which is more valuable than any profit you could make this month. Step 3, deepen your journaling. Now that you're trading with real emotions, we add 2 new fields to your journal. Why did I take this trade? How did I feel during the trade? Anxious, greedy, calm? This forces you to confront your trading psychology. By writing down your emotions, you start to see patterns in your behavior. You'll learn what triggers your mistakes. So to recap, month 2, use a small live account, complete the 10 trade rule streak, add psychology to your journal. If you complete this month, you will have more discipline than the vast majority of retail traders. Now we move to the final phase, and this is where we transition from being a rule follower to becoming a business owner. Your trading is a business and your journal is your business's data. The goal of month 3 is to find your edge by analyzing your performance. Here's your plan. Step 1, the weekly review. At the end of each week, you will spend 1 hour reviewing your trading journal from month 2 and 3. You're not just looking at wins and losses, you're a detective looking for clues. Ask yourself questions like, what time of day are my best trades? What mistakes am I repeating? Did I follow my rules perfectly? If not, why? This is where you find your unique edge. Step 2, introduce 1 new concept. After reviewing your data, you can now earn the right to add 1 new tool to your toolbox. A logical next step after mastering the break of structure is to learn its opposite, the change of character. While a break of structure signals trend continuation, a change of character is an early warning sign of a potential trend reversal. By adding this 1 pattern, you now have a framework for trading with the trend and against it. But again, only do this after you have reviewed your data and proven you can follow your rules. Step 3, calibrate based on data. Now that you have a track record of disciplined trades, you can start making small, data-driven adjustments. For example, your journal might show that your winning trades are consistently hitting a 2-to-1 risk to reward ratio. You can now adjust your take profit strategy based on your data, not some rule you read online. This is how you build a trading system that is uniquely yours. So, to recap month 3, conduct a weekly journal review, add 1 new pattern, and make 1 data-driven adjustment. Let's put it all together. In 90 days, you've gone from a complete beginner to a disciplined trader with a data-backed process. You've built a foundation, forged discipline, and started to analyze your own performance data. This slow focus process is actually the fastest path to consistent profitability. It's the direct antidote to the 90-90-90 rule. You're not gambling, you're building a skill 1 step at a time. Thanks for watching, and I'll see you in the next video.